Okay, you're new to trading. This is from a question from my friend who now has a bit of money and is coming out with all the cliche arguments. So you got a bit of money, you're new, and you think the financial analysts that are commenting on a stock have any relevance whatsoever. I'm just going to quickly explain why what they think or say is completely irrelevant. Okay, here we go. They give out buy, sell, undervalued. They give out all these various, so General Motors, they'll say buy, or they'll say or neutral, like their thought, and they'll give some kind of descriptions about what General Motors are up to. So they work at an investment bank, let's say Credit Suisse, and the investment bank, you always have to follow back the money. They work for Credit Suisse. Credit Suisse wants business from General Motors, because when they do business for General Motors, they make money. So to get business, do you think the analyst should say a positive thing or a negative thing? The answer is obvious. Even if the company is literally about to implode, they are not going to say a negative. The stock analyst is never going to say something negative, because the management of General Motors would never employ Credit Suisse if they did that. There is a conflict of interest for an analyst. So when you're beginning your investment journey, your trading journey, when an analyst comes out with blah 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 about XYZ stock, you can't actually say XYZ because that's now actually a stock. It's called Block or Square. I think they've even changed their name twice. Anyway, I digress. Whatever they say is completely useless, and you should never listen to it, because they have a conflict of interest and they can never say anything negative. And that's the first reason. The next reason is no analyst trades. They are not allowed to trade the stocks they cover. So if you work at Credit Suisse, if you want to buy a stock, you have to go to compliance. You have to say, I want to buy General Motors. And then they say, well, you can't because you meet with the board and we have restrictions and blah, blah, blah. There's all these sort of regulations now, which means the analyst cannot trade. So how can the analyst possibly say anything of value if, one, there's a conflict of interest, two, they don't trade, three, they're obliged to say something positive, and four, analysts actually have no idea about what moves the market. I lived opposite a girl called Celine. She was a financial analyst. I think she covered telecoms. So all that means is she churned out a report on Vodafone, on the various telecom companies that exist, and kind of does comparative advantages and kind of revenues and projections and all this kind of stuff. None of it is market related, because they have no idea how the stock market operates. They have no idea what moves a stock price. They literally don't. Her job was to talk to Vodafone or to take their earnings report and guess what the next one would be. And even if they beat or didn't beat, it didn't mean the stock price would go up if they beat on earnings. If they beat on earnings, but by not enough, the stock price would go down. If there's so many factors that cause the stock price to go up and down, it's not as black and white, if you're new to this, as just like, oh, they're going to come out with good earnings. Doesn't mean the stock price is going to go up. So when you see an analyst, ignore it 100%. And if anything, you can do the opposite. Yeah, it's just a brief overview, because I see a lot of new traders, they'll say, oh, the analyst projections. And I always just shake my head and just think, you've got to ignore that, because they ain't got a clue. I hope that's useful. I hope if you're new, that kind of makes sense, that them not having a clue is correct. Any questions, please just ask, because I'll try and fill in the gaps what I've missed. That's it.